Welcome back to Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. And we're going to dive right in and waste nobody's time kind of taking a look at these markets. And we might be making a little bit of a comeback. Let's take a look at corn, that corn table brought to us by Bar Chart. Look at that. We've got September now up a quarter cent at 5.39 even, about 5 cents off the highs. We've got down a half cent at 5.36.5, but we've made a little bit of a comeback as I've been on over the last half an hour. So I guess that's the positive you can take away from that. But still not a lot of action as far as price goes over in that corn market. Why don't we take a look at soybean, that soybean table? Okay here, right? 4 1/4 better in September at 12.98 even. 4 3/4 better in November, that new crop at 12.95.5, trying to make a run towards that 13 handle. We'll see if we can do that. And Chicago wheat, what do we have for the Chicago wheat market? Chicago wheat's up 6 cents, and that's the September contract at 7.20 1/4. December also up 6 cents at 7.34 1/4, and that's about mid-range as well. So mid of the daily trading range, kind of quiet at this moment in time. Hard red wheat in Kansas City up 7 1/4 cents in September at 7.09 1/4. December also up 5 cents at 7.20 3/4. How about Minneapolis? That spring wheat in Minneapolis was a little quieter. Now we've tacked on some real estate here. September's up 5 1/4 at 9.23 3/4, and December's up 3 cents at 9.05 1/4. And I'm going to sneak over to the cotton market to take a quick peek what's happening over there. Better across the board, but just pennies. 57 cents up in October at 94.47, and December's up 21 cents at 93.31. Joining me today is Todd Horowitz from Bubba Trading in Chicago. He's managed to stay away from the violence. All right, Todd, I know you're going to say it's August and what should we be expecting, but I have a lot of people that we have to tell them what's going on in the market. We just can't fob it off like that easily. So with your esteemed presence, what do you think here for these markets? We haven't really seen the rally that you'd like to have seen, or at least the comeback that we saw in the other markets on Friday. We kind of just are still laying there. What do you reckon?
Well, I think that's what you're going to see, Scott. I look, we know that money goes where it's treated best, and right now that is still equity, so we've seen those markets come back. But, you're seeing a market that if you turn around, the price has changed, and it's gone from positive to negative or negative to positive. And I mean, look at corn. We've been on both sides of unchanged today, 4 or 5 cents. Same thing in soybeans and in wheat. So you're just really chopping wood here as we wait. I mean, the clearest thing to do if you're a farmer is to be hedged and not have to worry about any of this gyration. If you're trading them, this is not the right time of year to be trading them. It's a very challenging market that is extremely thin on very light volume.
And we are guilty of it. At least I am for sure. I'm not going to throw you in there, but you know what we're guilty of is looking at it on a daily basis, and that's probably what we shouldn't be doing, especially in August. This week, you're going to find things start to grind a little bit, and then next week is going to be the end of the month, and we're moving, I think, into that Labor Day holiday. And so once that's going to be the case...
Scott, I'm sorry.
Yeah, no, go ahead.
I couldn't agree more. And I think especially with technology, guys are out in the combine looking at their iPhone at tick by tick. I mean, you cannot look at these markets tick by tick unless you're an active trader. And even then, this time of year, these type of markets are not tradable tick by tick. You can only get into trouble if you try to get too overactive in these markets and if you take too much away from any given move. Now, if soybeans break below 12.90, then there's something to be concerned about. But as long as they hold above, I think that's pretty solid support. And I think you just have to be very cautious this time of year and not look at the tick by tick or day by day, because that's not what you're in it for. You're in it for a much bigger move. You're not day trading the grains.
Especially when it's your job and you're a producer. I totally agree with you. All right, stay right there, Todd. We're going to go away and pay some bills and come back and talk with Todd Horowitz about the livestock after this. Welcome back to Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. And again, that is just a cheap segue to move into the live cattle market. Why don't we take a look at that table brought to us by Bar Chart? And we've got some good gains over there, don't we? October's up $2.85 at 131.90. We've got December up $2.27 at 136.80, and February coming in $1.25 higher at 139.47. So some good gains in live cattle. What's happening over in that feeder market? Much the same. We've got September up $2.17 at 167.67. And we've got October up $3 at $170. Well, $33.05 now, 170.67. And then obviously November behind it, up $2.37 at 171.17. Finally, let's take a look at these lean hogs. Lean hogs are rolling over just a bit here, right? October down $1.25 at 87.37. That's not too far off the lows there. So we've got December off 85 cents at 80.85. That's about 40 cents off the low in December. So hopefully Todd's still with us. I believe Todd Horowitz from Bubba Trading is still with us. Come in and give us your expert opinion on what's happening over there. I've got mine, but tell me what you're thinking about the livestock, Todd.
Well, I think cattle looks great. We've talked about this for quite a while. I think they're going to break out hard, and I think we're starting to see the beginning of it. There's a little bit of a pullback here from earlier highs, but I think we're right in the beginning of the next big move. I mean, hogs are still weak, and again, they're holding around that 88 level in October. I think that they're probably really seeing better days as I see it right now. You were going into a slow part of the year for them as well, but now that you have stadiums starting to open, you've got for sports starting, you're going to have some much bigger demand, and I do think that we're going to go significantly higher, at least in the cattle markets going forward. And I think that this is only the beginning as we start, but again, it still is a very slow time of year.
Well, and China's reporting no Delta variant now, and they think their economy is doing. I think they're slowing down actually. What are the things here in a quick 30 seconds do you think could derail us from all that great stuff you just talked about?
The only thing that would derail us is if this variant becomes a bigger political issue. It's not the disease itself, it's the politics behind it and what the politicians try to get done. If we just let the markets do their thing and let the businesses do their thing, I think we're in great shape. The only thing that will derail this is some political statement or some political action that would create a much bigger problem. Other than that, I think it's going to be fairly clear sailing, but as we know, markets are never clear sailing.
Right.
There's always a few bumps in the road on the way.
Couldn't have said it better myself. Thank you very much. That's Todd Horowitz from Bubba Trading in Chicago. I'm going to hand it back over to Janet.